Hello and welcome back to my channel, Value Investment with Manan Shroff. In today's video, another group member asked about the Tesla. I don't own the Tesla, but I used to own it. And usually we will go with the qualitative and quantitative analysis. In the qualitative side, what I have noticed, whoever owned the Tesla, you can ask them. The customer service is one of the issue with the company. Probably they have the monopoly right now, but once many more electronic vehicles manufacturer enter into the market, it's going to be a little tough because the customer service is the backbone of any company. So on qualitative side, that is the one negative point. The second point is that the CEO. So Elon Musk is very intelligent person, very intelligent CEO, can see the future, but his investment or any decision are very irrational. I mean, he tried to do the decision right and left without thinking. So that part I did not like. So when he bid for the Twitter, and then at that same time, I sold my position. But if you don't look for the qualitative, and if we just want to concentrate on quantitative analysis, we can figure it out the Tesla's good price, which have a good margin of safety, and it is tough to decide its price, some of these companies' price, because they are way over expensive, but we can still do that. So I will show you that what I will do with the Tesla thing. For Tesla, I have as usual, I have this statistic page. So in the Tesla, if you look here, trailing P is 106, forward P is 75. So it is very high. It's a really high price right now. Now, we go little bit here. Earlier, we made a presentation, I made presentation about NVIDIA, and enterprise value to EBITDA was 45. For Tesla, enterprise value to EBITDA is around 64, which is it's like very high end. I mean, so Tesla at current price is very expensive stock, no doubt about it. What would be the good price to purchase Tesla? We can calculate that. Usually what I do is, for Tesla, other quantitative analysis, the balance sheet is very good. Total cash is about 19 billion. Debt is only 6.5 billion. So they have the net cash balance 12 billion, which is very good. Another thing is what I look for the growth. Now, this all things are based on analysis estimate, but the analysis estimate says next 5-year growth per annum is going to be 45%. So the quickest way to find it out, the Tesla's reasonable price, is whatever their 5-year growth, consider that as your PE 45, and then multiply by with the next year earning. So the next year earning you see here, it's not disclosing here. So Yahoo Finance is not showing. So I went into my Bank of America Merrill Lynch account, and here it says Tesla strong buy. and then 12-month target price is $415, which for me, I'm little bit disagree with that. I will tell you what would be the good price, and this is my judgment, my observation. That includes also margin of safety. So what we can do is, if you see here, the 2022 is almost going to end now. It's August, one more quarter. So let's go to the operating earning per share 2023. The Tesla is going to make $5.75. So the quick way, what I will do is $5.75 multiply by with its five-year analysis estimate growth, 45.20. So this is the first price, okay, $260. Okay, $260 is a reasonable price. It's not extraordinary bargain price. It's a reasonable price for given growth in earning per share and looking at the balance sheet. But for the next couple of years, we also have to think about the other electric vehicles are coming in the market, and how does that affect the competition? So at 45 times PE, you also have to remember one more thing. If Tesla misses one quarter and shows the growth 20% or 18% or 15%, the stock will fall down badly. So that you have to keep it in mind. Okay. So the first price we figure it out is going to be around $260. Tesla is right now trading at $284. The other way we can do is here, enterprise value to EBITDA. Okay. So for enterprise value to EBITDA, the Tesla is almost 64 times. So how this number comes? If you look at the enterprise value, it is 915 billion, 915.48 billion. So 91.548 billion. And then you divided that with EBITDA. Basically, EBITDA means earning before paying any interest, tax, depreciation, and amortization. So it's 14 billion, 14.03 billion. So if you divide it, you get 65. So enterprise value to EBITDA is about 65.25. Okay. What I will do is, there are mature companies like Microsoft, Apple. They are not growing at 45% rate. Usually we try to give EBITDA 20 or 25 times. So in this Tesla's case, since analysis estimates 45% next 5-year growth, the 20 EBITDA would not work for Tesla, because if you put, like I will show you Microsoft, its enterprise value to EBITDA is 19. Okay. And then if you go to the growth, 5-year growth, it is 15%. Okay. If you look for Apple, next 5-year growth would be 10%. And if you see the EBITDA, 21 times. So looking at these companies, which are growing around between 10 and 15%, even Google, you check with the Google enterprise value to EBITDA is only 13 times. Not even, so I mean, Google is very good buy right now. But anyway, so let's see what percentage Google is growing. It's growing around 15% in next 5 years. So what we can do is, for Tesla, Since it's growing at 45% rate, if we had margin of safety, I would pay not more than 40 times EBITDA. So that being said, let's say the EBITDA for this year is 14 billion, right? And they said they're going to grow by 45%. So this is for 2022. So let's find it out EBITDA for 2023. So 14.03% multiply by 45%. So we add this one into, 6.13 billion plus 14.03 billion. Okay, so the next year EBITDA, earning before interest, tax, depreciation, amortization, based on the analysis estimate, will be 20 billion. Okay, so this figure will change here. This figure is going to be 20 billion. Okay. Now I want to pay not more than 40 times. Okay, so I will multiply this figure, which is 20 billion, with the 40 times. So that gives me the enterprise value. So they are saying the enterprise value should be 806 billion. Okay. Now from enterprise value, what we can do is look for the shares outstanding. Okay. So if we divided enterprise value with EBITDA divided by 3.13 billion, it's again coming up $257. With the first method, we found $260. Second method is $257. So what I will do is at 255, Tesla is very good buy. Okay. But if you want to own Tesla, you have to also think about writing covered call, because these companies you are buying at very peak. I mean, so if they miss one quarter for 45% growth, it will shatter the stock will fall down badly. So what we will do is, what I usually do, like if I have to trade Tesla today, let's say I want to buy 100 share, but I know the good price for Tesla is $255, around 255, right? So let's say I have the cash sitting in my account, 255, $25,500, right? So what we'll do with Tesla is I will go to this bar chart. Okay, in the bar chart is very good because that give you, now in this case, we don't own Tesla shares, so we're going to write secure cash put. So basically what we are doing is we are depositing $25,500, but we are not buying anything right now, because what we think that Tesla's good price to enter into the position is around $255. Okay, so what we will do is we will go here. I think I'm already logged in. So let's write down Tesla. Okay. So what I would do, and then I can give you what you can do. Usually I write 1 year contract, because for me, I can just, if it drops down to 255 or below, I'm happy to purchase, right? So what I will do is, if I put 1 year contract, that will put on around September 15, 2023. And I'm going to go into the put option, okay? Because what I'm doing is I want to buy. So this is the put. Okay. So currently price is around here. And its delta is, this is showing little wrong because the delta, always delta is around the market price. So, yeah, this is showing wrong. Let me see. Okay, so anyway, we want to buy it secure cash put 1 year from now. Okay, so what I'm saying that within 1 year, if Tesla is around 255 or below 255, I will buy it. Okay, so in that case, I will go here in the put option and look for 255. It's going to be somewhere here, right? Okay, so if we go $258, there is an executed trade. So let's go over for $258.33. In this case, I will sell the secure cash put and I will receive the premium $4,855. Basically, what I'm saying that I don't want to buy Tesla at $280 or $284. My purchase price, I want to be around 255. But while I'm waiting Tesla to go down to 255 or 258, I'm collecting the premium. So the things happen that Tesla would never go to $258. And then you keep the $4,855 premium. And again, you write the cover call. Now I showed you this is for 1 year, but you can always go for 1 week cover call. With I think 1 week you won't get that much premium, but let's say you go for 1 month in advance. So it should be September 30. And you have to go to the put option and you write the put option for 258 and you collect $775, which is good, right? I mean, for a month, you are just waiting Tesla to go down, and while you are waiting, you are collecting the premium. And that's what I do. When companies are overpriced, way overpriced, and you know the secure cash put is the best option rather than shorting the Tesla. You can't short Tesla. You can't short Amazon. It will kill you. Instead of shorting, what I would do is I would go for secure cash put if I am interested and I want to buy that company. Now, I haven't wrote any secure cash put for Tesla because I don't want to buy company, right? So, but if I want to purchase a Tesla, I would be comfortable purchasing around $255, $258. So I will patiently wait until Tesla falls down to that level. If it doesn't fall, then I will keep collecting the premium. And don't try to purchase it at $284 or $285. Because even with this statistic here, they are paying 60 times for 2024 earning. 60 times is way up. I mean, again, next 5 year is 45 times, right? 45% is growth. I will not pay more than 45 times. So $6.90 multiplied by 45, $310. So, but this is based on 2024 earning per share. So 2024, it's a different story right now. we are looking at the 2023, 2022. So in the short, that I would buy Tesla if it's around $255. I would keep writing secure cash put until Tesla hit down to that price and keep collecting the premium. If I don't want to write secure cash put, then I just have to wait for Tesla to drop down to that level and pass the opportunity right now. So I hope that this makes sense to you guys. And this is how I do analysis. Again, so if you want to purchase Tesla, don't purchase it at current market price. It is about $34 up, $30 up than what we calculated. We also have to add the margin of safety. So in $255 calculation, we did not add any margin of safety. But that would be okay because Tesla is trading right now at people wants to give Tesla 60 times 2023 earning or 2024 earning. So forget about margin of safety. $255, I will buy. Below 255, I will buy. Above 255, I will wait. I will wait until it gets down to 255. I hope this helped you. Please, if you have not subscribed to channel, please subscribe it. If you have any more symbol or ticker symbol, please ask me on our group and I will do video on it at my convenience. But this is what I will tell for the Tesla, that wait for Tesla to drop down to 255. Thank you. Have a nice day. Goodbye.